Hello there and welcome. My name is Ed Dixon. Welcome to the latest of SunMS4's COVID-19 audio casts and webinars. Today it is an audio cast, and I'd like to welcome participants from all over the world. Today I'm joined by two colleagues. Christine Potter, who's SunMS4's Director of Consulting for North America. She focuses on our education, non-profit and CSR client base, and has recently joined us after spending 14 years at Cornell University, where she was responsible for setting up and overseeing Cornell's legal entities in both China and India. So highly relevant experience for today. I'm also joined by Abhinav Sood, who's Head of Client Relations and International Projects within SunMS4's Financial Consulting Division. Abhinav will be taking us through some of the more technical aspects on today's call. And just to help sort of orientate us a little bit, so today's webinar is really focused on those companies, non-corporate institutions, universities, and so on, as well as any agencies who have got an operational presence in India. And we're going to be focusing in on the financial and reporting considerations presented by the COVID-19 situation. So just a couple of sort of practical issues. We are all in these times working from home, so if there are any audio issues throughout, please do let us know, and please bear with us if that is the case. There's a chat facility, as I've said, and if you've got questions, please do submit your questions through the chat facility. So I think without any further ado, let's get going. So what I'm going to do is actually turn to Abhinav in the first instance. Abhinav, can you, I guess, give us a bit of an update on the latest position on the ground in India, just from a COVID-19 perspective? I guess we're just over 2 weeks through India's initial lockdown. So it'd be good to hear about, I guess, the latest position, and any particular developments that have taken place, I guess, since our most recent webinars that I guess some of the attendees may have been on.
Thanks a lot, Ed. Hi, everybody. Given the sort of theme running these days is COVID, I think India is slowly catching up to the world with this pandemic, and accordingly, we're seeing reactions coming in pretty much on a daily basis from governments, businesses, and people. You rightly mentioned, Ed, that we are almost 2 weeks into our initial period of lockdown now, and our lockdown was supposed to end on April 14th. And this is a nationwide lockdown that is applicable throughout the country. But it seems that this is going to be extended now, or we may have a quick break before a version 2 of this lockdown is launched. We are hearing and reading that states and key bodies have made representations to the government to extend the lockdown in light of continuing health and safety concerns for people. And also given the fact that India is now classifying this pandemic as in between stage 2 and stage 3, when in stage 3 is the sort of community spread. So there are a lot of concerns that the Indian population has at large. Our Prime Minister Modi has also hinted that there will be an extension of the lockdown today. And it's also been very recently announced, as we speak today, that in the state of Uttar Pradesh, which is one of the highest populated states in the country, 15 key hotspots and districts are going to be in a severe lockdown till April 15th, and probably extended to April 30th as well. So all in all, I think we're all bracing ourselves for this model of lockdown to continue for the foreseeable future. I think when the initial lockdown was announced, there were a lot of compliance and relaxation measures that were announced. You know, RBI the Reserve Bank of India had come up with updates. The finance minister and the finance ministry and commerce ministry had come up with a lot of compliance relaxations. So did the labor ministry and all related business stakeholders. There was an economic package that was announced which was largely focused towards the underprivileged community in India. And what we've been seeing over the last 8 to 10 days is, notification and ordinances that are coming out, which are implementing these announcements. There have been recent provisions that have been introduced to enact these relaxations that would have been announced. I think we've discussed all these in great detail in our previous sessions, and for those who've joined in today, if they want to sort of revisit them, they could always sort of look through our webinars page and listen into all those announcements that had come out in the last 2-3 weeks or so. But very recently, if I talk about the last 4 to 5 working days, there have been smaller announcements that have come through. For example, the Social Security, that's the Provident Fund authorities in India, have released updated FAQs as of 4th April this week on the relaxations that they announced on blue-collar workers. They've also very recently appealed for the private sector to not lay off or have any pay cuts to organizations that are registered with Provident Fund authorities, to enable more smoother movement of essential goods. An e-pass system has been introduced by the government very recently. There is continued support to truckers and logistics providers so that at least essential supplies are hassle-free, though there was talk of expanding it to all sorts of goods being supplied in the country, but practically we're not seeing that happen right now. A lot of industry bodies have very recently, as we've seen the last month of slowdown coming through, they have come out with sector impact, sector analysis, sector recommendations for each sector, whether it's oil and gas, whether it's pharmaceutical, whether it's retail, aviation, tourism, education, not-for-profit. So I would urge readers to go through reports filed by FICCI, for example, SOCHAM. Also, I think from a tax side, all organizations have lower or nil withholding tax certificates that are issued to them. That has been extended by the government. Export proceeds realization have been extended by the government from 9 to 15 months. Some clarifications on donations to the PM's contribution towards COVID. The PM CARES contribution has also been provided. The foreign trade policy in our last discussion was also being extended. Some more notifications have come through there. And then of course there are on the ground health and safety updates that are being released on a daily basis. So this is all that's happened in the last 4 or 5 days. I think what we are expecting to come in the next few days or so is a new version or version 2 of a financial package. There is an expectation that this should also be focused towards corporate and SMEs as well, but the government is sort of tight-lipped about that right now. But all industry bodies, all government bodies are collecting feedback, initiating surveys. So for all of our attendees today, we would urge you to come to us and share your concerns. We can go back, to our sort of partners here, and as they collect this information for this version 2 of a financial package that will be announced, this would be very useful inputs. But I think largely overall, given the recent spike in numbers in India, I think you can expect difficulties to continue this for this and for the next month at least. So I think we all need to just brace ourselves.
That's great. Thank you for that, for setting the scene, Abhinav. Let's turn to Christine. Christine, so we've obviously got a good number of organisations on the audio cast today that have got legal entities in India. You're spending a good deal of time speaking to some of our clients in that same position. Can you try and give us a sense of how they're viewing the lockdown and what comes thereafter, and perhaps highlight some of the challenges that they're facing, both generally, but I guess focusing in on the kind of financial and reporting perspective as well?
Sure, thanks Ed, and hello to everybody out there. Thank you for attending today. I think the biggest challenge, of course, and this is worldwide, is just simply predicting those long-term implications to companies in the global economy, and then trying to plan accordingly. that's a really tough call. For companies operating in India, depending on the sector, areas like, productivity and the costs associated, and cash flow and supply chain are just some of the challenges. Companies are really eager, we're hearing, to protect their employees, but they're facing some really tough realities right now. They're wondering if there's going to be consumer demand for their product or service on the other side of the crisis, so that's very tough. They're also trying to balance cash flows to stay afloat during the pandemic, but they also need to have the staffing ready in place to hit the ground running when it's time to get back to business as the situation normalizes. We do know that, some companies do have the liquidity to ride this out, but others have low cash reserves, and they'll be making some really difficult decisions right now. Even for more established big businesses, we know there are vulnerabilities there too, and we're reading about those in the news, of course. And I think, companies are having to look at the whole ecosystem of their business and being careful not to shift the entire burden to either suppliers or customers right now, or for payables or receivables. I think this is a really precarious balance. I think depending on how the Indian government stages the lifting of the lockdown, it's going to play a role in how companies will need to adapt. So let's say, for instance, the company divides the country into zones based on exposure risk. I think some companies could start to get back to business sooner than others. There's talk about initiating sort of sector-specific operating procedures, which would dictate how an entire sector, such as like retail, might rotate their operating times. And then there's talk about keeping retailers open in cycles, but around the clock, so 24/7, to avoid overcrowding. And, if retailers only able to open for limited hours a day or week, I think careful staff planning will be required. And then, of course, revenue and expenses are inevitably going to be impacted there. I think we should be hearing some new guidelines in the coming days, depending on how the lockdown plays out. So we'll have to just keep our eyes on the news there. For international universities that are reliant on recruitment for international student populations, the immediate question is whether fall intake will happen as usual. And then if so, how those incoming student numbers and, of course, tuition revenue will be impacted. And I think this is top of mind for them. The good news on the US side of things is that we've heard from the US Embassy in India that student visas will be given top priority when the lockdown ends. So that's really good news. But, there are going to be inevitable delays with the current delay, just people not being at work right now. There's just so many unknowns. I think at a micro level, for NGOs and institutions working on grant or gift funded projects, the situation is different. Most grant making organizations are allowing for budget and deliverable modifications. And some grants have a 3 or 5 year funding promise. So timeframes are not as critical for those organizations. We've heard about projects that have changed their focus to COVID-19 with the approval from granting agencies. So that's really great news as well. The work is continuing on the ground as soon as lockdown opens up. I think for new donor and grant sponsored projects, at least for many disciplines, there's going to be a delay in application deadlines or application processing. And this is obviously going to impact operational realities on the ground. And then finally, for organizations, I'm thinking, not-for-profits and higher education and other organizations that are conducting sort of in-country revenue generating programs, say corporate training programs, executive education. I think it's difficult to tell how long that this is going to play out in the long term. I think in the short term, organizations are canceling programs for obvious reasons, and then they're having to refund tuition. So lots of complexities here, lots of challenges.
Yeah, complexity and challenge seems to be the appropriate word. Abhinav, coming back to you, and I suppose orientating us a little bit more into the kind of financial reporting side of things. Perhaps you could give us a summary of the, key challenges for organizations from a local regulations perspective, And especially given the fact that I guess the financial year in India has just ended, and I guess thinking that through from the perspective of a senior person in a finance function or a CFO, of which we've got a number on the call today.
Thanks, Ed. I think the first part of this that you're rightly pointing out is the financial reporting aspects, and I think the second part probably would be more on financial planning and analysis, which we can take up later. But as you rightly also pointing out that the India financial year ends on 31st March, so we're very, very precariously positioned in terms of the whole accounting and financial reporting cycle for many organizations. Now, governments in past announcements have done a lot of relaxations on compliances, waivers of interest and penalties, so on and so forth. But, from a financial or a reporting or a management point of view, it has to take a business as usual approach. Your accounting needs to continue day to day, even though transactions may be reducing. Your payroll needs to continue, your financial reporting needs to continue. And now, given this is the year end for many organizations and the new year is starting, those year end requirements also need to continue. So this has posed a bit of a situation for almost all companies who have sizable operations in India, big or small. And so I think the first thing is that how do you close your March 31st accounts? And there were rumors right now that the financial year could be extended and you would have a 15-month financial year instead of a 12-month one right now, but that has not happened and the government has not come with any announcements, and it is pretty clear that they would not do so as well in the near future. So I think all organizations would need to take cognizance of the fact that they have to close out their year-end finance and start the new year financial reporting in a timely and an accurate manner. In this, I think the biggest challenge is how do you do all that remotely, given India is under lockdown right now. And for bigger organizations, that may be a little easier because they have the technologies available, remote access, cloud servers, everything in place to be able to do at least part of the activities, if not whole. But for smaller organizations or organizations who have a smaller footprint in India, this would be a tremendous challenge. Also, assuming you're able to do that remotely as well, then a lot of next steps start to emerge where you have to reinvent or revisit how the process is run. So, for example, your audit would need to start, which every company is sort of mandated to do in India. How do you plan that in a remote fashion? Because typically all audits are sort of run on site. So you need to rejig your audit plans. How do you take care of physical requirements such as inventory check, fixed asset register checks that auditors need to conduct and the organizations need to conduct internally as well. So some of that you would have to do on an assumption basis. You will have to talk to auditors on how to sort of delay or handle this till the lockdown situation continues. I think for all closing of this year's account and for future years as well, and for the future year as well, revenue recognition, how you're accounting, how you're changing your revenue recognition matrices according to Indian accounting standards. For as Christine mentioned, for non-profit organizations who are accounting for grants or companies who are receiving government revenue, how do you look at government grants and government contracts, and how do you account for that in this situation? A big question that everybody is being faced with is impairment of assets or impairment of stock, given that we're going through a recession now. In light of the COVID situation, how do you revalue your assets, revalue your stock? What impact does that have on your balance sheet? These are some pretty difficult questions to answer, and there are no options to organizations but to answer them. I think one big concept in accounting is events after the balance sheet date. India sort of faced the COVID brunt in a very late stage in the financial year for India, so there are not many implications for the financial year per se, but there are going to be significant events that are happening after March 31st, as we are sitting today, and in the next couple of months, that are going to impact your financial year 19-20 financials as well. So, so you need to take that into account with auditors as well as with your management as to how those are addressed in your financial statements. For smaller organizations, and especially for organizations who are in critical sectors such as aviation, tourism, education also, there would be a going concern question that is being raised under accounting standards for them. So these are very, very critical and sensitive discussions that you would need to have with auditors and with the management, and accordingly need to address and disclose them in your balance sheets. I think for organizations who are giving away equity stock option plans or have equity instruments that they are issuing, all that needs to be revalued again. There is a whole new scope of activity that comes there. I think as everybody starts to feel the cash sort of tightening up, you'll have bad debt situations, you'll have contingent liabilities that need to be created in the books. All these will become heavier numbers in your balance sheet, and then of course to your shareholders and stakeholders, you would need to explain as to how you are evaluating these numbers. All the sort of financial statements that we are looking at or working on, we're starting to see a lot of notes being sort of disclosed in the financial statements, and everything is related to COVID. So areas such as internal control framework, for those who are mandated to follow the internal control on financial reporting standards, you need to make certain disclosures there because clearly you're not being physically able to control a lot of things. And there are so many other examples that as well that I can quote. I think even for the new financial year, you'll have to start your new payroll cycles for your staff. The Finance Act had changed the way employees were taxed. They have now options to choose between tax slabs. So making sure everything is working right. There are still lacunas in law that you need to address. So everything has to be done within this month because your first payroll would start to roll out by the end of this month. As well as, accounting for new areas that have emerged as a result of COVID. All the relaxations, for example, for blue collar workers in Provident Fund that have been announced. How do you account for those? If you're delaying any tax payments, how do you account for those? What are the imputed interest costs, so on and so forth. And also making sure all your documentation from a financial reporting perspective is comprehensive, because 5 years down the line, when you will start to have tax assessments and tax litigation going on. Everybody knows that in India, litigations go on for years and years. You would have to produce documents to authorities that, even 5 years ago, we had certain changes to our financial reporting, documentation requirements, compliance requirements, given COVID. So your documentation needs to be that more robust as well. So I think the larger question is that, you need to have a very, very detailed dialogue process between your accountants, your auditors, your consultants, and overall your management as well, so that you ensure that there are no gaps in the financial reporting system. I think everybody is just interpreting this situation in a completely different way, with some sort of threads that are tying in together. And my personal view is that this is going to create a lot of friction in the coming days for financial reports for almost all companies. So one needs to be very, very clear with the communication. They need to get a little creative in finding their solutions for sticky points that come up in discussions with auditors or accountants. As an example, if you're seeking a sort of deferral in your liabilities, how will you account for it, and what are the legal implications that you need to report in your financial statements? What will be the tax impact of those deferrals? Each and every set of transactions will have a defined scope and need for review. So all in all, just to probably just conclude this larger argument, I think every area of your financial reporting requirements would need a definite revisiting at this time and for the next 2-3 months at least.
That's great. It sounds like we're all going to be kept very busy. Maybe you could just also comment, I guess, around the kind of planning elements that we should watch out for from a financial perspective, which I guess other than the year-end related activity you've obviously just outlined.
So I think Christine very rightly had touched upon this earlier as well, into sort of looking at more creative ways of cash flow management, looking at your financial liquidity and strength in a more creative and detailed way. And there are so many discussions that are floating around right now as to how to look at this. So many organizations are coming up with new ideas. There are best case practices, there are worst case practices. And so right now, what we are seeing with sort of our universe is that all organizations are looking at budgets and cash flows on a month by month basis, with probably a maximum time leap of 6 months, not beyond that. So all your existing 2-3 year plans, full year financial projections, everything that you had created probably at the end of the last calendar year or the beginning of this year, they're all being put in the lower drawer for now. And as situations change, you will need to redo, adapt, and revisit these estimates. You will likely have 4 or 5 versions again that are being circulated. You'll have a best case scenario, a likely scenario, a worst case scenario, and then you'll just look at averages as to how this plays out in your cash flow situation for the next 3 to 6 months. I think one key area where we are heavily focusing on is sort of liquidity and key financial ratios. This is determining how your position is today and how your position is going to be 3 months and 6 months down the line, and how liquid you're going to remain. And accordingly, all the decisions that you're taking, whether it's for your obligations, your staff, are being sort of made on the basis of these determinations. And I think all the sort of monthly financial reporting activities at the back end of this planning is being monitored in much more real time than it already was for almost all organizations. So again, there's a lot of work that is coming in and a lot of pressure that finance teams are facing, that they have to sort of monitor everything on real time now, rather than doing it maybe once a month or once a quarter. I think the key question is, once you have this cash flow analysis or a cash flow rejig being put in place, how are you enabling savings? So what is your plan for all your vendor costs right now? How are you negotiating with your vendors? What is the percentage of savings that you're generating as a result of these negotiations? What is your plan for lease rentals, for example? What is happening in the rest of the world? So Australia, for example, has instituted a general understanding that all your lease rentals can be prorated in relation to the fall in your revenues. So if your revenues are falling by 50%, your rentals should also accordingly fall, and landowners have to take that brunt. India right now only has an advisory issued that you can't force people out, and you have to be accommodating with your lessees in terms of these lease rentals, but it becomes an onus on finance teams to assess how this impacts your cash flow numbers in a positive way for the next 3 to 6 months. How are you saving or renegotiating on borrowings, for example, is another situation for organizations who have borrowed heavily. You need to renegotiate interest rates, payment moratoriums, so on and so forth. Everybody's trying to collect as much cash as they can from their debtors. And it's a very difficult argument that you need to have, because the people who are paying you are also assessing their payments in the same way that you are. So that's another conversation that you need to have in a very detailed way. Bring your lawyers, accountants, and advisors into those discussions. We've covered staff costs in a very detailed fashion in previous discussions as well. There are HR and legal implications there as well. Contractual obligations have legal implications. And I think the larger question that everybody's trying to answer is, a deferring versus a reduction. Do you defer your payments or do you reduce them? And both of these arguments have a significant impact on how you're reporting your numbers and your cash flows as well. If you're deferring, for example, can you tap into your HO funds or HQ funds later, or have equity or subvention schemes flowing in from your head office overseas to take care of these costs in the future if revenues don't start to flow immediately? What are the financial packages that are probably being announced? I mean, India hasn't announced any, but there are some in the UK and US, and can your subsidiaries in India tap into them? And what is the cost of capital there? So I think all in all, you just have to get very creative and understand how these cash flow systems are going to proceed for the next 3 months or 6 months. And there are a lot of best practices out there already. It's just for each individual and for each organization to assess what applies on their entity and company.
That's great. Thanks, Abhinav. So we'll switch to Christine, but before I do so, just to remind everyone, if you've got questions, please do use the chat function to submit your questions. A number of you submitted questions ahead of the session today, which we're trying to kind of weave in through some of the questions I'm asking the team. But if you have any additional questions, please let us know. So Christine, coming back to you, what do organizations need to do to, I guess, manage some of the challenges that we've just spent some time focusing on?
Yeah, thanks. I think Abhinav rightly said about creativity, and right now I think we're all being very creative about how we're approaching our businesses. You know, there are a lot of governmental clarifications that are coming through, but really there's still a lot of things that are up in the air, but companies need to make decisions now, so they're being forced into that decision-making process even without, you know, further clarification. You know, I'd say that the advisories that the government is issuing, and in some cases the law, may say one thing, but due to the realities, companies may be forced to follow a different route, even if they wish to support the spirit of the guidance being provided. For example, with contractual arrangements like Abhinav is talking about, businesses may knowingly be taking actions that are putting individual contracts at risk in order to protect the interests of their businesses. There's also inconsistencies between some of the advice that's being provided and the realities on the ground, and I think that's a really uncomfortable place for companies. The practical sort of on the ground issues will vary substantially. I think Abhinav said that rightly so, and you know, depending on the type of organization that's supporting your operations. I think some of the companies that are relying on smaller service providers and advisors are likely to face material issues, such as just being able to access data because it's stored on servers or on paper in offices, and they're currently in lockdown offices. There's also the question as to whether or not the auditor that you're working with is able to work remotely, and sort of how this all plays out in the long run. You know, I think this is a situation where we're all going to be faced to learn, but companies need to have some foresight and sort of have contingency planning for all of these things, and be aware of the hurdles, as Abhinav mentioned, and then just plan accordingly. This has been talked about, I think, already pretty extensively, but around financing strategies. And I think just continually evaluating cash flow and cash position is really important. You know, if you had a line of credit before, it's worth checking in with your bank to make sure that that line of credit is still available. You know, situations are changing. And then we shouldn't also assume that we'd be eligible for a line of credit if it was needed. So kind of lining those arrangements up now in the event that, you know, you'll need it down the line, I think that's super important. We also know that companies are reducing staff costs and conducting vendor by vendor negotiations to reduce their overhead, and Abhinav talked about that. And I know that we're actually conducting this service for several of our clients right now. So working directly with clients' vendors just to help reduce some of their costs for goods and services, you know, if they're directly related to the lockdown. So, you know, if you're not occupying your office, can you negotiate with your landlord to reduce your costs? And I think we're getting pretty creative, here comes this word again, around these negotiations. And, you know, on the good side, clients are seeing really good direct results from these negotiations.
Good to hear. Abhinav, switching back to you. So on the last webinar, I guess focused on related topics, we spent a bit of time talking about force majeure for those that have that in their contracts. Could you perhaps talk us through how organisations look at their contractual obligations in case they are facing headwinds with their liabilities?
Sure. I think we've touched upon the sort of financial aspect of that, where you can, wherein all actually you can do is just negotiate, reassess, and sort of lower your liabilities. But there's this whole other side which brings us to the legal arguments for all your contractual obligations. I think there are, in most contracts that we see, between principals, consultants, and organizations, is that there is a sort of interest clause. So for delay in payments, you need to sort of go back on the drawing board and assess what kind of waivers that you can on those interests. Are there any clauses that are there, generic clauses that are there for reduction or deferral in your payments or liabilities that you can exploit, for lack of a better word, in this situation. But the larger question comes on force majeure. That is something of a constant question that is being asked for almost all the contracts, especially the larger ones that organizations have in India. I think the first thing is that we assess is that, whether there is a robust force majeure clause that is defined in the contract. If not, then you need to look at the law. So in India, you have the Indian Contract Act 1872, specifically section 56, which looks at force majeure events. And so as the clauses read, can you assess, whether this situation right now is covered under the contract. Also, the government has endorsed COVID as a force majeure event a few weeks ago, but those were only for sort of government contracts and government activities. So can you rely on them as an inference to invoke force majeure in your own contracts as well, is something that is a discussion that you need to have with the lawyers. Once there is this definition that is clearly coming out of your contractual obligations, how is that event defined, whether it is defined or not? Is there an exclusion that puts this whole situation into that exclusion bucket as well, is something that you need to very deeply assess. And unfortunately, if you are in the excluded zone, then there is no respite that you're going to get from your contractual obligations right now. But if it is, and you are able to define it as a force majeure event as part of your contracts, then you need to go much deeper and define the procedure to claim from your counterparty. So the burden of proof is essentially on the person or on the party who is declaring this and invoking this clause in the contract. So you will have to prove that there is a suspension in work, there is an impediment to business. You will have to provide all these documents and then invoke this clause. If you're not able to do that in a robust fashion, tomorrow courts or arbitrations can assess that you falsely claim this event as a force majeure, and therefore all the obligations that you try to get out of are actually applicable on you with interest, penalties, and so on and so forth. So all those activities need to be done in a very careful way. And then, of course, once you've done all that, then you seek relief on your contract. So the relief could be short-term, the relief could be long-term, and you could also look at termination of clauses. And a key factor here is timelines. The question that we are faced with almost every time these days is that, we don't know the timelines of how long this situation is going to pan out for. It could be 3 months, it could be 6 months, it could be a whole year. Again, this brings you back on the drawing board, where you need to assess that, okay, probably within 3 to 4 months time, we would be able to fulfill our obligations either partly or wholly. And that conversation and dialogue needs to happen between both the parties or multiple parties in case of a multi-pronged contract. And then you look at how this force majeure clause actually comes into effect. So I think bottom line, again, you need to ensure that first this falls under those clauses or falls under the Indian Contract Act for you, and then you need to work with your team and your lawyers and your advisors to ensure that all these documentation and requirements are completed before you start to seek relief.
Yeah, thank you. Christine, we've obviously talked a lot so far about, I guess, the extra workload and burden that COVID-19 is creating. Maybe if you could just spend a few minutes just, I guess, pinpointing whether you see opportunities for organizations to counter, I guess, the headwinds, and maybe pinpointing any silver linings that you see that might come out of the situation.
Sure, Ed. Perhaps not directly related to a silver lining, but I'm just thinking about what Abhinav was talking about with contracting. You know, I think the future of contract negotiations are going to look a lot different after we're on the other side of this. You know, I know just in speaking with our own clients that they're really being forced to look inward right now and evaluate their business model. And I think some are going to realize it's time to retool and look at ways to be better prepared to deal with adverse situations in the future, and then also where they can create efficiencies moving forward. So whether that's through technology or, you know, expenditures or process improvement or internal governance, yeah, we're likely to see some silver linings there in the respect that we're going to come out stronger on the other side. You know, we're also seeing a lot of companies innovating and repurposing to adapt their business to emerging demands related to the pandemic. And on the other side, I think we're going to see a lot of sort of evolved businesses, which is also, I think, a really exciting prospect. Perhaps this isn't necessarily a silver lining per se in some people's eyes, but, you know, things like financial stress testing and having committees around risk management can help mitigate, you know, future exposure to adverse situations as well. And I think if companies can get a head start on this and start thinking proactively, it'll be good. I know a lot of companies already are, but just to keep that in mind. You know, I think in the long term, it'll be really interesting to see how headcount balances with outsourcing. It could be that we see a shift in that environment. And then, you know, I mentioned a couple of weeks ago that the Ministry of Corporate Affairs announced that, you know, combating COVID-19 is an eligible CSR activity. And so there are meaningful ways that organizations can get involved in this area. And that includes like the promotion of healthcare, including preventative healthcare and sanitation and disaster management. So again, this is really good news for our not-for-profit and, you know, education sector that's working on the ground.
That's great. Thanks, Christine. Abhinav, same question to you. What, if any, silver linings do you see?
I think Christine sort of covered it in a very practical way. I think there are going to be difficult decisions that organizations are going to be forced to make now, and that is going to lead to some fragility in the short term as well. But I think the good thing, and probably this is a silver lining only, that that organizations will come out a little leaner and fitter and have, you know, contingency plans in place at least for the next 10-15 years before we start to forget this episode. You know, Christine mentioned stress tests, risk committees, and these are not generally in place for organizations in the routine course of business, but now companies, institutions will start to focus a lot more and have a lot more contingency plans in place than they already do. And I think in that process, there will be new learnings, there will be new assessments coming through. And I think for most of the millennial sort of working population, this would be like a good 101 lesson in business management. On the cost side, I think since we're talking on financial reporting and sort of cash flows here, I do see a lot of potential savings coming through in the future, even after COVID gets out. And, you know, as is sort of, as organizations are guilty in the boom phase of doing a lot of spillage of costs, and sort of being inefficient in how they're spending, they would start to get a little more prudent and conduct a good analysis on before they embark on any sort of marketing spend, travel spends, office infrastructure spend. So I think businesses and institutions are going to be very, are going to get into a lot of sensible analysis in taking care of their costs in future. So that's a good thing, actually. And I think in India specifically, I think the whole movement of moving away to technology and how this has forced companies to move online is a blessing in disguise. In the West, we see a lot of organizations have already embraced technology, but in India, there is still a lot of paper trails. There is still a lot of paper-based businesses that are going on, and they are switching away to digital models now. We'd already seen a wave of digital payments, demonetization, and so many new initiatives that the government had announced in the last couple of years, and they're going to start to really take shape now. Fortunately or unfortunately, as a result of coronavirus. And again, that's a good thing, and that again will lead to a lot of cost saving in the future as well. I think on the advocacy side of things, this will also encourage a lot of regulators to be a little more practical and relaxed in their compliance requirements. India has been, there's a huge issue with the international community that India's laws are very stringent. The compliance requirements are very, very stringent, and it's, again, everything is paper-based. So moving away to signing of electronic documents, for example, lowering some compliance burden that you need to do every week, every month. I think this is going to encourage regulators to become a little more prudent with their own demands that they put on businesses and institutions and companies as well from a compliance perspective. So these are, it's an unfortunate way to address all these good takeaways that are coming through, but these are definitely small silver linings that I see once we get out of this short-term situation that we have faced with.
Yeah, thanks for that. And I do appreciate that it's tough to look at silver linings at the moment when many organisations are really focused on survival. But some good comments there, and I'd certainly endorse the point you made about electronic documents as someone that's probably signed, I don't know, high hundreds or possibly even thousands of company-related documents. Electronic documentation can work well. So I'm just going to, unless there are any other questions, I'm just going to end with one question that came in from Sandeep. And Abhinav, maybe I'll direct this towards you in the first instance. So Sandeep was asking about the fallout of COVID-19 on India's SME, small and medium-sized enterprises, given that they contribute so much to the economy, and what strategies they should adopt to bounce back in a post-pandemic era. So I just wondered if you've got any thoughts on that.
Thanks, Sandeep, and thanks for the question. I think it's a difficult situation to be in, to be very honest, and frankly, the lack of government announcements right now is not helping, and so it's a very grim picture that is being painted for the SME sector here in India right now. And again, we are seeing so many reports coming out, say for small-time retailers, for example, that at least 25 to 30% of them may be out of business if the government doesn't help after this lockdown. Industry bodies are recommending stimulus packages of at least a few $100 billion towards the SME sector to take them out of the challenges that they are facing currently. And right now it's a very small time frame that we've been looking at where this has impacted SME's business, and as these timelines grow, this is going to get more and more difficult unless there is a bailout package coming through. So it's a very difficult time. I think of all the strategies that we've discussed today in our discussion, many of them apply to SMEs as well. They need to ensure that they're, being very, very proactive on reduction in costs, assessing their payroll responsibilities very well, ensuring that wherever they can, especially SMEs who have a lot of blue collars working for them, ensuring that you can access government packages that have been announced so far, and making sure that you just stay afloat during this during the next 3 to 6 months, and then creating strategies and creating effective positioning methodologies that once this is over, you could straight away jump into the thick of things and start to generate revenue that takes over a bit of the loss and burn that you have during this 3 to 6 month framework. But largely, apart from these strategies, the situation is pretty difficult for SME sector right now in India.
Yeah, good, thank you. And I should mention that Sanam S4's CEO is on the CII's MSME committee, and I know they've been kind of actively working behind the scenes to provide recommendations. So a very apt question, Sandeep. We are now 50 minutes into our allotted slot. We've completed all the questions, so I'm going to use this opportunity to thank Christine and Abhinav both for their insights. Thank you all for attending today. Please keep an eye on our the Sanam S4 webinar page for future webinars. We expect to have a further webinar next week, and of course, as Abhinav and Christine have both mentioned, we look out for what comes next in terms of the lockdown, and look forward to any proposals the Indian government brings forward on supporting business. So with that, I will bring the session to a close. Thank you for attending today.
Thank you.
Thank you.
Thank you.